All right, what's up, fam? Market just opened. Let's go ahead and take a look at the daily. Few questions were higher time frame analysis, how I go through it step by step, and what my process is for doing higher time frame analysis. So daily chart right here. I still have my PD array that I have off here. Switch to this. Have my PD array off to the right here. And this just gives me an idea of where we're at in this higher time frame premium discount. So we got into this premium array, and now we've come back down to equilibrium. So for the higher time frame analysis, what I like to do is I like to start off with the weekly chart. Go to the weekly, and it's obviously slower moving, so I don't need to check it as often. But like right here, we kind of had this bottoming where we created a swing low. Everything was wicking up from this area, and then we had this nice run up last week. And then this week we're taking out those gains that we made last week. So on the higher time frame, starting with the week, not much change to the weekly. Just going to be watching where the rest of the week heads. So moving on to the daily. We created a swing high right here, and we have our swing low right here. So if I take the fib and we'll run it like so, we have this fair value gap in here or this order block. So can we come back down to this 38.71 area into this order block? Sure, it's possible. Just got to look at the signs, and we'll study how each week sets up and how each day sets up power of three. And when we're talking about power of three, a few guys have been posting it on the group chat, and those charts are looking good. Just start getting into the habit of thinking about where the candle is going to open. Is it manipulating up or down? And where's the expansion? Are we expanding up or are we expanding down? And then where the close is going to happen. So for today, we opened up right at 4,008. We manipulated up to 40.31. Big red day down to 39.46, 39.43, and then closed at 39.46. So that was a power of three for today's candle. Moving on, I go from the daily to the 4-hour chart. Four-hour chart gives you a lot of information, especially when you're working on the 1 hour, 15-minute, and 5-minute time frames. We'll kind of talk about this right here, and we'll talk about some specifics of this whole area this week. But we got a big CB right here, sell side imbalance with the buy side inefficiency. And then we still have some more imbalance down here. So all this down here needs to be balanced. It's possible that we could get under here and take out these lows. So we'll keep identifying how the days are setting up and where they're going to, and if we're getting retracements. Another thing that we'll talk about on the lower time frames is time, and how targeting this daily fair value gap was a really good target for today based on the price action and how quickly it was moving down. All right, so let's go down into the 1 hour time frame. All right. So we had all this volatile movement, and then we made this expansion up here, and this was the start of our week. Okay, and this has been our week so far. Now, if I look at this, just looking at this whole area right here, this is a range. So if I look at the candle bodies right here, candle bodies, oh, look at over here, look what we talked about. Look at how the candle bodies just came above that. Okay, we'll talk about that in a little bit as well too. And then we have our candle body lows right here. So this range that's been created on Sunday, Monday, set the range for the week. And now because it stayed within this range, this was a consolidation. It was consolidation on a higher time frame, which is why we had such a big expansion coming out of it. So that was this action for the week was a big reason why we could expect a larger expansion. Another thing we'll get into, you guys are asking about the central bank stealing range. When I get into the 15-minute time frame, we will go over that, and we'll go over where I used it at and what insights it gave me. Now, just looking how I have this set up right now, if my candle bodies create this top sort of right here, what is this right here? We have 1, 2, 3, 4. What could I label anything above this line? Well, if I'm looking at this and I see how price reacts, it goes up here, and look at how big this wick is. The candle bodies come all the way back down here, and then we break above here again, and this wick and candle body comes and closes all the way back down here. And then we have this run up in here, and it comes all the way back down. When you're looking at price action, and when we're going over what ICT talks about, watch the bodies of the candles and watch the wicks and how they form and what relationship they form. This whole setup right here to me was screaming, here's our range, and anytime we come above this 40.26, the banks are loading orders. This is all buy side liquidity up here. And so we go 1, 2, 3, 4, 5, 6. 6 times it was gathering all these orders, and it triggered all this liquidity, and it was just gathering, gathering, gathering. And then we get a huge dump. Another thing that's going to confirm this is going to be the central bank stealing range. So I'm not like a expert on the CBDR. I've gone over those lessons a few times. I'm trying to implement it a little more. Uki seems to have a pretty good grasp on it, and he uses it quite often. I'm using it. I started noticing that if you use it at the beginning of the week, it can set the tone of the week. So I'm kind of doing that and seeing how everything plays out. And you're going to be able to see this when we go down onto the 15-minute time frame. So see how we created these equal lows right here as well, right at this order block. And then look what price does on this 1 hour candle. Just completely blows right through that. And we'll see that on the 15-minute chart as well. So moving on to the 15-minute chart. All right. All right, what do we got here? Monday. Okay. So I like, here's my, this is the GAN box that I use to find the central bank dealing range. So this is what I have marked off. I took this is going to be not the central bank dealing range, but this is going to be the Asian range. And it's from 1800 to midnight. I gotta go back and look at my notes on this. So if I go into this GAN box, you can do it multiple ways. You can use a fib. Uki has a really good fib setup to do the same thing. I kind of just go in here and I'm like looking at all this. And when I see price come up to this one standard deviation and it's rejecting away, um, that was kind of like another clue. Like this is all they're going to give us right now, and we haven't. And if we look at down here, we haven't even come close to even hitting one standard deviation below us. It's all been touching the one standard deviation above us. We've come to about half on the low side. So that means if all week we're just staying in this range, then it's going to want to expand down into the deviations below. So that was another kind of tool that was helpful in seeing that, yeah, we're going to look to go lower. Plus we have the equal lows right here, the daily volume imbalance. Like there's just a lot of things that were like kind of screaming out like, yeah, price is going to come test these lower areas. So if I go into the settings of the GAN box, here's my settings. 0, 1, 2, 3, and then -1, -2. I added a 4, and sometimes I just interchange these. Like I don't need the -2, so I'll just come in here and I'll hit 5, and boom. Now that gives me my standard deviation down here. There we go. Let's use this tool, and boom. Look at that. I mean, like almost to the penny. So let me look back through my notes and let me find this the range 1800 to midnight. Um, but then if you go through the videos, I believe it's month 8 ICT, the actual central bank's dealing range, that's going to be your 1400, so 2 p.m. New York time to 2000 New York time or 8 p.m. New York time. And you're looking for a ideal range that's 20 to 30 pips. So everyone's looking up like how are pips related to this? Um, because it says it's like a point in percentage is what pip means. I kind of look at this as if it's within 20 to 30 handles, then it seems like it's been working out quite nicely. And then you're looking at like the overall movement of price. So like if we have this big movement, well, this should be about 20 to 30%. And if this is 1, and you come down here, we're about 3.5, and up here about another half. So we're looking at 4 total. So that's about 25%. So that's kind of how you could quickly see if it's going to be a good range or not. And again, when I set it up early in the week, I like to see how price reacts to these different standard deviations and points at them. What is it targeting first? What day in the week is it targeting these standard deviations? And how does price react around these standard deviations? And again, it's just another tool for Confluence. I think where most people are at in the room, um, with the basics and mastering all the foundational skills, there's a ton of setups that you guys can achieve and accomplish and hit 4 to 5 handles, 5 to 10 handles with really good entries and exits without even using this. This is just another layer to the total toolkit that he's giving us to learn. Um, I've taken plenty of setups without this that were clear as day and have made money on them. So don't be discouraged if this isn't clicking right away, or if it's something that you don't understand or you haven't gotten to that video yet. My advice is to, like anything, keep going over the fundamentals, keep going over the basics, give yourself a good base foundation, and just keep building on that. It's going to come, it's going to take time, and it's going to be a process, and everybody's going to have their own timeline. Don't worry about trying to keep up with one person or another person. Just focus on how you learn the best and how you are able to digest the information and the pace that you can do it so that you can be successful for your situation. Because everybody's situation is different and everybody's going to learn in a different manner and at a different pace, and that's 100% okay. Okay, so we talked about that this weekly range was consolidation, and then we had this huge sell-off. Um, so I did not take this short at the top here. Let's go ahead and expand this and look at today's price action. And we'll go down to a 5-minute chart. All right. So I actually took this trade right here on the 15-second chart because it presented the exact same as this trade right here, which we'll see on the 1 minute. But if we just go over the price action for all of today, we were targeting down here. There we go, end of New York. So we were targeting this 39.96 yesterday. Didn't get there. We open up the day, retrace a little bit, come down. This was a BPR right here, and we had this volume imbalance right here. Let's go all the way back. Let's go on the 1 minute. It's easy to see. It's got to be a better way to scroll through TradingView on lower time frames than doing this. All right, so yesterday afternoon, we gap down, we go down, we create this BPR. So we have a balanced price range where we know we're going to need to come back into this area, and we're going to have to come back into this void right here from the gap down. Okay, we touched our 39.96, which is what we were looking for yesterday, and it got down to there on the open of the market. And then the Asian session opened, and we came down, and the wicks actually came down lower than the two previous touches into this area. Okay, so the candle bodies, the candle bodies came down and went lower. So I was talking about that yesterday with you guys, and I was hoping to kind of get you guys to see that and see how important that is, because they use that as a liquidity grab. So even if this ends up being the same exact price, but the candle body is lower than this candle body, that's a liquidity grab. So then we moved up from there. So I actually took a long entry right here, and I just set my stops, my sell orders right here. Well, news came out, Bank of Japan, and this thing skyrocketed. Then we had more BPR going on up here. So waited for it to get up in here, and then took a short down to 50% of the 5-minute fair value gap. And it comes down to the 50% level. And that was that done for the Asian sesh. Asian sesh stays flat after that, and London stays flat after that. Okay, we get PPI, we get the manipulation, and we start working right here. This was my 15-second time frame trade. The entry was right there where that fair value gap was, and then I was targeting just below here, and it works its way down and ends up breaking below that right here. All right, today's short entry, we had relative equal highs right here. This purple line represents the buy side liquidity. It also represents a 1 standard deviation. So again, we come up in here, we're grabbing orders. Come up here, grab orders, and then one more time we come up here and grab orders, and we take out these highs. Price quickly moves away, so we have displacement away from that area. Work our way back up into this order block. Okay, hit the order block and displace away again very quickly, leaving a fair value gap, which you see here. And then we also have a swing low that's created here. And so if we just draw a line from where that is and this fair value gap, we have price that comes up into there, was that about 4-5 times. Okay. Distributing orders, gathering orders, and then boom, quickly moves away. What are our targets going short on here? We have, this can be one. This is a swing low. So if you got up here, 40.26 to 40.17, that's 9 points. That's a great move. 40.16, that's 10 points. That's a great move. We have this swing low over here from the manipulation. That's 40.10. So now we're looking at 16 points. And then higher time frame stuff. This is the daily volume imbalance. So because price is quickly going away, remember time before anything, within a matter of, let's see, 10:30, we'll say starts our drop out of our entry zone to 11:07. So in 37 minutes, we make a 426 to 390. We make a 36-point move, basically, 35-point move. With very, very little retracement. Okay, so what do we want to look for when we start hitting these higher time frame points of interest? Notice how this gap again, what does it do? This is all designed to get people out of their positions because it knows where it wants to go already. So it hits this gap, and what does it do? Boom, reject, reject, reject. And what is this going to cause? Emotion in people. Oh man, it's going to reverse right now because it rejected here before. It's got to reject here. It's messing with the retail trader's mind. This is a level. It keeps rejecting this level. Oh, so it must reject it again. So then it sends it up and then quickly comes back through. So anytime we're looking at, is it a true rejection? We need to remember that we're always looking for these models. This is a perfect short entry model. We have a higher time frame point of interest where we took out buy side liquidity. We have a break in structure. We have a market structure shift with a fair value gap, optimal trade entry short. So if this was going to reject, we'd need to see that same sort of setup start happening. And it'd have to meet all that criteria. If it doesn't, don't get faked out on that. So then we blow through the daily volume imbalance. And again, very, very minimal retracement. I mean, even the consolidation is still trending down. Lower highs, lower lows. Goes down, retraces back up, lower lows. Okay, so there's multiple areas to get in. I didn't even take any of this along this way. I ended up actually ended up getting down in here as I was looking at the hourly chart. I was like, oh, this thing wants to keep ripping. So like we talk about time, how fast is this moving down? Well, here's 11:30, okay? In 1 hour, we are now down below this volume imbalance. So what's below this? Where does it want to head to? Why are we moving down so quickly? And when you see price moving that quickly, that's when you need to stop and ask yourself, why is it moving in a certain direction so quickly? That should start making you check other higher time frame points of interest as possible places that price wants to head. Where's the magnet? It didn't even stop and take a lunch break and retrace back up. It was like, nah, we got to make it to this area on time. So we even consolidate right here, a little bit of a fake out with this higher high right here, but we're still making lower lows. We're still kind of trending down. And then here is another possible trade entry that we went over today and put up multiple charts on, and how we have an order block right here. Price comes down. I talked about this swing low and this swing low, how I want to see price displace through this area. It came back up into this order block. We have this imbalance. It came up here and caught this imbalance. And then what does it do? It displaces through this area all the way through. So what does that tell me? It tells me that it wants to go lower. This is not where it wants to stop or reverse at. So then we have this breaker, okay, this fair value gap. And as we march this out and price rejects from there, price should not go higher than this because we're looking for a lower target. It should not reverse above this. So it ends up coming back up here. But my target was like somewhere right around here, 39.58 was my target. And that was a fib projection. That's where I got that target. So 39.59, 39.58 was a fib projection. And I'll go back over that on the 1 hour as to how I got that, so you guys can use that. But that was just another tool of where can I have a target and where can I plan an exit at. So we do get some retracement back, and this was the biggest retracement of the day. Notice how we got just above this daily fair value gap, and then it makes this big retracement back up, but it never breaks into this order block. This is, again, algo just working itself to draw out time as it wants to get down here eventually. Because we got down so quickly, it got down here a little bit ahead of schedule, is what I like to say. And so this is just time waste. It's not giving you any entries to go long. There's no really solid higher time frame point of interest right here because we have this fair value gap that's right here. And it doesn't give you any break in structure, market structure shift, order block, fair value gap, optimal trade entry long. It just goes up, comes up here, messes around, comes down, comes up, messes around. One more time into this order block, down, back into this volume imbalance, and then finally hits terminus. So that was today's price action. I was talking about this daily fair value gap today because of how much we consolidated, how quickly we were moving down, and all the factors that we talked about before going into this top-down analysis going into today. So let's go back to the 1 hour. And let me break out the fib. Okay. So all right. Here's another good point of interest. These equal lows right here. And you notice how price went back up after it took this out. That's where we had the biggest retracement, and then boom, down to where it needed to get to. Let me check it. All right. Okay. Rob, did I answer your question on optimal trade entry short? Or do you want me to zoom in on that again? I don't know, for some reason, every time I click off the streaming software, the chat disappears, so I can't see when people are typing when I'm clicking on the chart. All right, I'll come back to that. Okay, so we have a swing low right here, right? And here's our swing high, okay? So I want to know how far is price likely to go below this swing low. So I take my fib tool, and we go from the swing high to the swing low. Okay, so you got your 1 up here, your starting point. Here's your 0 because you came all the way up here. So this would be like 1 standard deviation using this fib. So how many standard deviations is it likely to go? Okay. So here's half. So this is 1/2 of this fib area is right here. And so when we punched through here, came up, barely a trace, and punched through again, to me that was a sign that this is not our target. Okay, so then I look to the next target. Well, what's that 1 standard deviation below using the fib tool? What's this 1 fib projection? And this is all these are. These are just projected fibs based off of the fib that you draw. And so they go by halves. That's how I have it labeled. So you have half, 1, 1.5, and 2. So this almost made it to 1.5 fib projection. My target was this 39.59.75 because it was below these equal lows, and I figured that it would displace through and catch this 1 fib projection. Let me see if I can darken it up a little bit. All right. So it's kind of hard to see the numbering right there, but here they are. So it's divided into, this is my fib projection settings. And you can save your templates. So if you look right here, I have my ICT fib, which just gives me my half, my 62%, 79% retracements. I have a PD array fib, so that's the one that Yuki posted in the group chat, where it just gives you all your standard deviations. Or I'm sorry, this is no, my PD array fib is just a 1 half point and a 0. My projection fib is what I have showing right now, and that gives me possible projections as to where price can head. If we're thinking that it's going to go short, well, how short is it going to go? Where is it likely to aim towards? And then the standard deviation tool is one that will set up for giving me different standard deviations. And you can save each template under there and name it so that when you want to scroll to do something different, you just run it and I can go, oh, I need to run my ICT fib right here. Okay, boom. And so here you go. Now I got no color in the background and it just gives me my retracement levels. Half, 62%, 79%. If I need to look at standard deviation, okay, now I got all these settings. Sometimes I color them in, sometimes I don't. Sometimes I just want to look real quick and see levels, and I'll mark them on my chart. So we'll go projection. And there's my projection fib. Excuse me. So this is my target, and that's how I got that number. And yeah, it worked out nicely. Let's see. So that was the recap of today. If we go to daily, get rid of all this. I don't like my charts being messy. We had this consolidation here. We broke up out of it. We rejected this order block, and we're coming back down here. Again, it's possible we get into this order block right here. So that's something I can mark on this daily chart. And we'll see how price reacts from this area right here. Seasonality wise, just because we're bullish, remember that's for a whole quarter. That's for January through April. So even though we could be bullish January through April, that doesn't mean we're just going to trend up, 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 up for 4 months or 3 months. January through March, I'm sorry. And then April's kind of our shifting point. So we just had this strong move up out of this consolidation. We could retrace back down here before we start moving up again. It's quite possible. It might want to dip back down here into this discount area on the PD array before making another high to this 62% and getting up into this weekly 50% wick that we had marked on our charts from the ICT talk. that's the breakdown of today. Hopefully it was helpful. Hopefully you guys learned something and I answered your questions. More than happy to do this whenever you guys want. If you want to go over basic stuff, just let me know and we can do this. And hope everyone keeps improving. Right. You guys have a good evening.